The decline we saw in the New Zealand dollar yesterday has actually proved to be very fleeting, and already the New Zealand dollar is back up to 82 cents against the US dollar. Now, when we saw the pickup in the US dollar yesterday, we actually thought that that would gain a bit more traction over the near term and continue and help provide some adjustment to the New Zealand dollar. Unfortunately, that has not been the case. And in fact, we were quite surprised to see the US dollar decline last night, given the economic developments. First up, we saw initial jobless claims continue to decline, and that does suggest that the US labour market is continuing to recover. In addition, we've also seen manufacturing confidence remain quite upbeat. Now, both of these would normally suggest that you'd see an increase in US interest rates and an increase in the US dollar, but actually what we saw was the opposite. We do suspect that there was a bit of a technical correction in US interest rates. US Treasury yields had moved up quite far very fast, and perhaps this was too much for the market to digest. Now, over the next couple of days, there is very little in the way of major US economic data, so there is not a lot to drive direction, and we can expect the New Zealand dollar to range trade. The next key event for the New Zealand dollar is Q4 GDP, which is out on Thursday, the 22nd of March. Now, turning to the Eurozone, we've seen some signs of steady improvement over the past few weeks. Now, last night we had the IMF officially approve the Greek bailout, and so in turn we can expect that this will prevent a messy default from Greece, at least for now. Now, as a result of this stabilisation in sentiment, we've seen demand pick up for a lot of government bonds in the Eurozone. Over the past few days, we've seen both Spain and Italy have some quite successful bond auctions, and these shows that investor confidence have returned to the region. Now, with signs of improving investor confidence and also some tentative signs of economic recovery, what this means is there's less need for the European Central Bank to provide some further stimulus over the coming year. Indeed, recent rhetoric from the ECB suggests that they are actually quite reluctant to provide further stimulus because they're becoming increasingly wary of the upside risk to inflation. Now, the upshot of all this is the prospect of less stimulus will actually provide some support to the euro, which has been quite weak over the past few months. In turn, this should limit any further upside that we'll see in the New Zealand dollar against the euro, at least for now.